Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, everybody. Good morning, good afternoon. Wherever you are in the world, depending on what time it is for you. Hope you're doing well. And yeah, sorry for the April Fool's prank this morning. I think we were reading the comments here this morning, and look, I got you. Okay, what can I say? A lot of you guys are really toppled you to the floor with that one, and we'll see you next year. Be on your feet next year, man. You got to be ready. I'm the biggest April Fool of them all, so I cannot let one April Fool's Day pass me by without taking full advantage. And I feel like we did a pretty solid job. No, I'm not leaving YouTube. And I don't know what I would do with, YouTube is a huge part of my life. You guys as a community are a huge part of my life. It's, I love you. No, but I do genuinely, really appreciate being able to do this every day. And I'm not going anywhere. Okay, so let's see what's going on. We got one day, April Fool's Day. The only fools are going to be people who miss the sale that we're running this month. And this is not an April Fool's joke. It is actually our biggest sale of the year. We're kicking off the EdgeFinder 3rd anniversary. See the theme change all around you? We kicked off our 3rd year anniversary sale of the EdgeFinder. I'll have more information on that, but currently you get 45% off if you direct message us on the website. That is the biggest discount of the year. If you're somebody who's a deal shopper, if you've been waiting for an opportunity to pick up a copy of the EdgeFinder, this is the best chance you're going to have all year. It's the lowest price we go. 45% off the EdgeFinder. So yeah, don't miss that opportunity. It is the biggest discount possible for the tool, and it's a one-time payment for access to all of our tools and data. We launched something pretty cool, still under construction. The color coding needs work right now, but we launched something that a lot of our users requested, which is some top setups focused, so the top setups algorithm, right? The generic one or the main one considers sentiment, technical, and sentiment. Sentiment, technicals, and fundamentals. It combines all 3 to give you a total kind of summary score. But some people prefer just looking at economic data. Other people prefer just sentiment data. And what's exciting is that we do, in fact, have the sentiment one coming too, but right now we already have the economic focused top setups scoring. This will show you when we look at only economic data, the scoring algorithm that the EdgeFinder is using. It just isolates the EdgeFinder's eco score. So that was a request by a number of people who wanted more kind of focused in top setups ideas. And I think it's really an exciting one. So you can currently see the most bearish and most bullish economic readings within the EdgeFinder. And then, of course, I still, I'm sticking to my bread and butter, which is I want to look at all 3. But some people prefer to look at only sentiment. They prefer to look at only economic. So we've built some screens that we're going to implement there. Bought the EdgeFinder last night with a 45% discount. Awesome. Congrats on that. Bashi, is there a payment plan option for the 45% off? For you, we'll make an exception. If you send us a direct message right now, someone from our team will try and sort it out for you. Like I said, shoot us a DM on our website, a1trading.com, speak with a support rep. they may be able to help you sort out something that works best for you. Okay, so let's talk markets. Stocks are all over the place. Indices wobbly at best as we sit here at the lows. You had a nice bounce back yesterday. Yesterday, I bought a stock that I haven't bought in so long. You ready for it? Anybody have a guess? What stock did I buy yesterday? What stock? Starts with an M. Starts with an M. It's Meta. I bought Meta stock yesterday. One of my favorite long-term companies is Meta. Why? Meta is really cool for a main reason, which is Meta, of all of the companies out there, I can't think of a company that is better leveraging AI today. Not in the future. Tesla, for example, is a speculative idea. Their idea is like, oh, in the future, they're going to seriously leverage AI. Are they using it today? Sure. But to me, Meta is massively using AI right now. Have you ever noticed when you go on Facebook or Instagram or these social media sites, how smart they are at keeping you on the platform? They're watching everything you do, and that is AI, right? AI, they are implementing a ton of artificial intelligence into making their platforms more sticky, keeping all of us glued to our screen so they can sell more advertising. Look, Instagram, Facebook, all the doom scrolling that we all do, right? That's AI being leveraged today to make money, right? So Meta is a company I love. And at the discount that we're getting, right? Yesterday, I bought it at about a 23% discount off of the all-time highs. So I'm slightly in profit on my position, but this is a longer-term position trade for me. And just a stock that I've owned off and on for years. I actually bought it. You want to hear a big oof from me? I bought Meta down here. I'm not even kidding. I think I might have got it at like $89 a share. It was like right down at the lows. Like I bought this thing. I think I bought some and then I bought more after this big tank. I bought like the low on Meta. Back then it was Facebook. And then you know what I did? I sold out of it. I can't remember when I sold it, but it was way too early. Way too early. And then it proceeded to, from the lows, you ready for this? This stock 7x'd. That's crazy, right? So I sold way too soon on the stock on this stock in the past, but it's a company that I love, and making a bet on the Zuck, if you will. Anyways, Nasdaq still looking pretty ugly, and this is a test here today. But really, I think all eyes are focused on tomorrow's tariff news. You've got a lot of uncertainty in this market. So what we saw here is a push below the lows here yesterday. But before we can get too bearish on this, I mean, that was a sharp reaction from the bulls. Bulls scooped yesterday's low really aggressively. We got to give it to them, right? The Nasdaq bulls really came in strong yesterday. That may not look like much, but this guy's at one point was almost a 3% rally intraday. This market is so volatile. To get these kinds of moves, 3% down, and then another, massive move lower, and then a rally through the day. I mean, these are some volatile times that we are living in. Certainly, there is plenty of opportunity if you are willing to be patient, look for proper setups. I still think that the NASDAQ and S&P are in the process of bottoming. We may see fresh lows here before that is in, but I do think that there is a good chance that we are reaching the lows of this move. The put call ratio still at very high extreme levels. People really, really concerned about the NASDAQ, about the S&P, about stocks in general. Why would we buy stocks right now when we can get them much cheaper? That's the mentality of a lot of people out there. And a lot of people are buying puts. Yesterday, if you bought puts, it was we literally called that on stream. Ivan, actually, who was in the chat. Am I still correct about the NASDAQ? Let's hope, man. Let's hope. We had a good start, good bounce. Like to the minute, Ivan hopped on the stream. And I don't know, maybe Ivan is a good luck charm, but we started bottoming out. We discussed on stream how a lot of people are going to buy puts today. That's exactly what people did. And those puts are already probably getting hurt. If you bought like 3 days out puts or 1 week till expiration puts, I mean, this is a story as old as market time. People buy puts at the worst possible time. We saw the big spike in put demand right here, right? Puts are bearish bets, right? People made huge bearish bets right there when that market just popped just a little bit, minus 100% for a lot of options out there, right? A lot of options lost complete amounts of their value, right? 100% losses on their puts if you bought puts at the worst possible time. So I think people are doing that right now. And I'll continue to say that with such an elevated put to call ratio, the premium on puts is very, very high. As an option seller, I love this type of environment because I can sell puts, sell calls, and make a lot of income just off of offering, being the market maker, right? The market maker is selling puts, selling calls, and collecting income just from people making big bets on where they let everybody else play the casino. That's the market maker's model. They basically just say, if you want to make a huge bet that the market's going to crash, go for it. We'll sell you that option. If you want to make a giant bet that the market's going to rip here, we'll sell you that option. And most of the time, the market maker makes money. So we've got, in just a little bit here, some PMI data coming out. 10 o'clock, that's 30 minutes. We have ISM manufacturing PMI and JOLTS job openings. Both of these are potentially pretty market moving. We definitely do not want to miss this. So we're going to pay attention to the ISM manufacturing PMIs. Let's just take a look at what we're looking at here for a forecast. We are expecting a contraction in manufacturing PMIs. Under 50 is considered contraction. Over 50 is considered expansion, okay? We are expecting a slight contraction in sentiment about forward-looking indicators of the economy. PMIs are forward-looking, right? Many people love to say, oh, so-and-so indicators are lagging, fundamentals are lagging, price action is the best. Cool thing about PMI is that PMI data asks notable people in the economy what they see coming in the future within their respective industries. So think about where, let's say that you're like a manager at a grocery store, right? Or let's say even higher than that. Like, let's say that you manage a chain of grocery stores in the southeast part of the United States. Just an example, right? You manage a bunch of grocery stores. That person within the company has a lot of eyes on, a lot of vision, a lot of Eagles level vision of what is coming for the grocery store company, right? They can see orders coming in. They can see floor traffic in the grocery stores. They can see, popular products, things that are popping off. They can see if they need to be hiring more people or letting people go, right? Key people in the economy hold a key to what the future is looking like. And so PMI data is really key. It asks those people, are you planning on hiring more? Are orders looking solid? Are they looking, weak? So this is really important data. It's forward looking. So the PMI data comes out in just about 30 minutes. And this is for the manufacturing sector of the economy, right? So manufacturing is a smaller part of the US economy than services, but still an important piece. So we'll see what that data brings us. We'll also get JOLTS job openings, right? Job openings postings are really important. If they're strong, lots of demand for hiring, that's a solid economy look. And if it's weak, if it's low levels of job openings, we'd consider that a weaker jobs market. Let's take a look while we're just on the subject of the JOLTS job openings. We can take a look at our job market data and go job openings US. So what I'm going to do here is I'm actually going to expand my search back for the last 3 years to give us some context. You can see that JOLTS job openings over the last 3-year period have been declining. You can attribute this largely to, I would say, higher interest rates. With money being a little bit more expensive to borrow, that impacts a lot of people. It impacts the consumer. It impacts businesses who are choosing to hire. So we have seen a continued overall decline in job openings, but this is not at critical levels. Let me be clear. A lot of people are like, oh, the labor market is so bad out there. It's really not in comparison to history. Okay. So we are still not quite back to pre-pandemic levels of hiring, right? We had a huge burst with interest rates going to rock bottom, right? Tons of hiring flew out in 2021, and then we started to decline. And we've been on a decline for a number of years now. We're headed back, it seems like, towards that pre-pandemic zone. And then if we take a look at the unemployment rate, this is where I also want to show you something that's pretty important. You might say, well, again, sometimes you hear people saying, "Oh, the job market is so bad right now." It's really not bad in comparison to historical levels, right? I'm not saying it's easy out there. We got high prices still, and I'm not saying it's easy at all. I'm just saying that in terms of what the Fed looks at for intensive purposes of this live stream, when we're talking markets, right? Unemployment rate can go much higher before it is considered historically problematic. 5.7%, to my knowledge, is the average unemployment rate over the long term in the United States. So where we are at with around 4% unemployment rate is really not so bad, right? We've been at a low unemployment rate through 2022, 2023, and still holding on to that low unemployment rate. The concern for many people is that unemployment rate is going to rise dramatically with all of the uncertainties around tariffs. People are worried about growth, etc. Again, this is where I say, when I talk about this stuff, there's a lot of concerns around tariffs, but right now they're just that. They're concerns. They're not certainties. We haven't seen it, I would argue, in a wide span within the economic data. Now, if unemployment rate starts to rise, again, that would be the hard data meeting the concerns. If you take a look at markets recently, right, there's been a lot of fear, a lot of people selling stocks, a lot of people, buying gold, right, running to safe havens. The point that I'm getting at with that is that unemployment rate comes out on Friday. And so the question is, does the rumor of slowing growth and concerns around tariffs and the consumer potentially freaking out and not spending as much, and does that actually materialize in the labor data that comes out on Friday? That's really what's going to be big. I mean, if you get an uptick in unemployment rate, gold can fly. That's, kind of gold's sweet spot. As people get worried about the economy, they get worried that, the Fed may need to cut interest rates to save the day, and people lose faith in the dollar, and they say, well, you know what? We need to rush to gold. And that's been the theme here, right? Gold has been going up. I mean, this has been a phenomenal trend for the gold bulls out there. Metals in general, gold is holding up a lot better than silver. Been a little bit frustrated with my silver position here. I'm still in the trade. Entered back here, nice push, broke through those levels, trailed my stop loss below this low. And yesterday we intraday retested that area, bounced back. And now it seems like we're kind of just chopping back around. I have my stop loss below this level of support. So if we fail here, I'm going to go ahead and take a profit on this move. But if we can kind of get some follow through here, if we can get some bullish pressure on metals, I'm looking to see if silver can also continue its uptrend. If it doesn't, then we'll just take profits at this breakdown. How can you be a market maker? I thought only big institutions like Citadel can. Lorraine, that's a great question. Market makers. So let's say that you want to go out. What I mean by that was options, right? So let's say you're looking at the S&P 500, SPY. When I say market maker, what I was referring to is options sellers, right? People who you can buy a call or buy a put, but somebody has to sell you that. And believe it or not, retail traders can actually sell those options. They can sell bets. When you go to like a casino and the house, right, sells you a bet on the game and they collect a spread, right? In the options market, retail traders can do the same thing. I could sell you a call, right? I could sell you a put and I play the house. Basically, I pay you out if you're right, and I collect a premium from you up front, essentially the spread, right? If you're using sports gambling mechanisms, right? It's like the spread. You pay the casino every time you place a bet. As an options seller, you can actually kind of be the market maker by essentially selling bets to other traders. Hopefully that makes sense. I know options can be a little complex, and I'm not going to really go into options today just because we got to keep the stream moving. But if you would like to learn more about options, what I would encourage you to do is go to my YouTube channel. I actually recently created a playlist all about options trading for beginners. If that's something that you're interested in, consider taking some time after this live stream and just adding that to your watch later tab on YouTube or something. You can keep up with it. But back to gold for a second. Again, another day, another up move. I mean, this is just, it really does feel like gold goes up every single day. It's impressive. It's impressive. I think that if you're watching this, and you're thinking, man, when is gold going to sell? I'm stuck in sell positions. I mean, I sound like a broken record at this point. If you watch every day, you know exactly what I'm about to say. Trying to time the top of gold is just, it is so much harder, and people make the same mistake every single day we go on this live stream. People are trying to short gold at the highs, and it just keeps going and going and going. And there's just this perpetual uncertainty in this market right now. Again, whether you like or dislike what's happening with the White House, with Ukraine and Russia, regardless of your viewpoints on it, right? You may like it, you may dislike it. People are uncertain about the outcomes of all of it. And so that uncertainty is driving people into gold, right? People are like, get me out of stocks, get me out of dollar, get me out of everything. I just want something stable for now. And so what we see here is a demand for bonds rising and a demand for gold rising. I mean, that's a classic kind of risk off feel to this market. So that to me is why I think when we look at a gold price movement like this, there is no logic for me in selling gold, in trying to short or bet against this move. So let me also clarify. Okay, Nick, if you're not shorting, then what are you doing with gold? The answer is I really hate to be so boring, but there's nothing I can do here. I have to wait for a pullback. I like gold to the long side. I traded gold from here to here, and I really wish that I didn't get stopped out or trailed out for a profit. I took a profit. I felt like a hero. I was like, woohoo! I caught a great trade. And then gold, even me, right? You know, I've done this for 8 years. I would not claim to be perfect at trading by any means. You can see I got stopped out here, trailed out, right? I put my stop loss. I was like, okay, you know, if it holds and we keep going, great, I'll stay in the trade. Well, it tricked me, right? Whipped down, took me out. I took profits. I made great profit on this trade, but my profit would have doubled had I kept staying in the trade. But look, I'm not going to sit and like cry about that, right? At the end of the day, we got to move on. We got to keep going, right? No matter what style of exit or trading strategy or entry or exit pattern that you use, nothing's going to work 100%. So I can't sit around and be like angry at myself. Oh my gosh, I missed this move. This would have been a huge, huge additional profit to my position. So FOMO is an understatement. I was right about the gold move, got trailed out right here, and now it's kept going without me. So it's frustrating, right? But that's trading. Like you can't avoid that. No matter how hard you try to avoid drawdown, FOMO, trades that hit your stop and then keep going, no matter how hard you try, you can't fully avoid that. You can do your best to avoid it, but there's no way to fully avoid it. So what can we do? Well, trust me, I want to be long gold too. So I've got to wait for a pullback. There's nothing else I can do. I'm not going to try and get cute, not going to try and short to catch the pullback, right? Because I don't know that a pullback is going to happen right now. We could see, again, a rush to 3,200. We said this about 3,100, by the way. We said we could see a rush to 3,100 before we even get a pullback. And sure enough, many people were like, no way, that's not happening, right? Not 3,100. Comment section, always there's people selling gold. You know, it's gone too high. It's got to come down. And then it just, against all odds, just keeps going. So could we see 3,200 before a pullback? We could. Could we see 3,250, 3,300 before any kind of pullback? Yes. Gold baffles people day in, day out. It is a master at doing that. It is a master at completely psyching people out. So with gold prices going up, I can't buy and I can't sell. So what do? Bullish, but got to wait for a pullback. If I don't get it, nothing to do. Does that make sense? I know I've said that every day for like a week now on gold, but that is really my, after doing this for as long as I have, it's a really important learned lesson from trading gold. It's one of my favorite things to trade. I've made over the years good money trading gold, but what I've learned about it is you can't chase, and you certainly can't short in a big rally upside. PMI numbers will be coming out at 10 a.m. So that's 15 minutes, guys. So, like I said, I like gold. It's a top setup within the EdgeFinder still. Actually, is it? What happened? Where did gold go? Did I miss something? COT data, seasonality, bearish. That's gotta be a mistake, right? Do we have an error on the gold? Yeah, we totally do. Guys, I'm going to get that fixed right now because that is wrong. Seasonality on gold is incorrect right now, I think at... Yeah, no, that actually... So EdgeFinder seasonality is scoring incorrectly. So I'm going to get that sorted out. I just messaged the dev team. They must be working on something and might have score got mixed up or something. But yeah, seasonality actually being +2 would put us at a factor of 4. That's a +8. So gold should be at the top of the list, and it will be in just a second. Anyways, other thing that I wanted to mention about gold, and I've said this a lot of times on the show, but I just want to reiterate it. Look, gold is, institutional money has been long for the whole ride. So the whole time with gold on this show, I can't, if I could count, if I had $1 for every time I discussed how retail traders are all short gold and institutional money was long, I wouldn't even, I could just go retire on the beach for the next, lifetime. I say it all the time because it's really important that we get this. Look, the COT data history shows us long positions versus short positions of institutional money. Institutional money has been persistently long gold. So there's no reason. This, in combination with weaker US economic data, gives me every reason to stay bullish gold and no reason to get bearish gold. Institutional money is long. Economic data points towards bullishness for gold. Does that mean it's going to go up forever? No, it's going to pull back. It will eventually. It may not be today, may not be tomorrow, but it will. And so on those pullbacks, I'm going to be a buyer until conditions change. Okay. So tracking institutional money is really important for this matter, because if you looked at this for even a split second for the last 2 years, you'd say, oh man, I got to be real careful about sells, because look who I'm fighting against. Smart money. Smart money's been bullish gold. Okay. Just a heads up, guys, the EdgeFinder 40% off sale just got kicked off. It is our biggest sale price discount of the entire year. And just a heads up, it's our 3rd anniversary since launching the tool. That is why we do such a big special event, sale event for the EdgeFinder. It is currently 40% off, but for people who are watching this live stream right now, you can currently get 45% off. Here is how you can take advantage of our lowest prices on the EdgeFinder for the entire year. It's a one-time payment. You get 45% off the usual price. Send us a direct message on our website. We're going to be dropping a link here in the live stream chat as we speak. Do not miss this opportunity. It's the lowest price we do all year long. Once it ends, it ends. Take advantage. 45% off happening right now. Send us a direct message using this link to speak directly to a member of our support team who can get you some information about the sale so that you do not miss the opportunity. If you've been thinking about getting a copy, do not take this for granted. We will not have a lower price than 45% off this year. Okay, up next, guys, we got Alan Perez jumping in. I'll stick around with him because we got news here in just a little bit. But Alan is going to be joining me on camera here in just a moment after this quick break. Stay tuned. We'll be right back. We launched the EdgeFinder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the EdgeFinder is producing now. The EdgeFinder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name EdgeFinder. So if you're not already using the EdgeFinder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the EdgeFinder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the EdgeFinder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the EdgeFinder at the super discounted prices. Thanks for watching. And now back to the show. All right, we're back with Alan. I think you're here, Alan. Can you hear me?
Yes. How you doing?
Good. For some reason, your camera's doing that thing. You're a dark screen right now.
No, don't tell me that. All right. Let's see.
Sorry, I don't want to break the bad news. We can hear you, and it is a very nice looking black screen. I don't know. It's completely blacked out. It's kind of a cool color, but I don't know why I can.
How about now?
Still can't see. I'm not sure why. Unless, can the audience see? I mean, let me know if it's just me. But yeah, I can't see you currently. But that's okay. We'll wait for the audience to see if they can see me or see you. But oh, now he's gone. But we'll get him back. See if we can try a second time.
The stop cam and then turn it back on. We'll see if that works.
Weird. Yeah, no, it's still a dark screen. Yeah, people are okay. It's not just me. Interesting. All good. Well, Alan, we can at least hear you. We can try and work it out off camera. What's the latest? What are you watching right now?
So thanks for the company, man. We have news coming up. I'm watching the dollar index, and from what I've been hearing from others, parts like the euro, which is improving relative to the dollar. There's some structural headwinds that are still around, but I do think that the dollar is due for a little bit of a pullback. I did my weekly outlook, and I was basically showing how we did kind of bounce off of resistance. We bounced off the 200-day moving average, and the 10-year yield also did the same thing on the higher time frames, which is always a good indication or a good confluence that you can see. But what's your stance on the dollar? I know we're both kind of going for a stronger equity indices, and it looks like we got a little double bottom maybe yesterday. Hopefully that remains and we can continue upward from there. But what's your stance?
Yeah, indices have been trying to come back a little bit. When it comes to the dollar index, it's kind of tricky. In fact, we added something new that I wanted to just touch base on with you, Alan, about with the EdgeFinder's new economic scan. We had this. There was actually a couple guys in the chat in the Discord asking about something like this, and basically it's a more focused in version of the top setups algorithm. So it's actually just looking at economic data points and generating a score here. Now the color coding is all out of whack, so bear with us on that. It looks pretty ugly right now, but the scores right here, the eco scores, are what we want to pay attention to. And the reason I point this out is that this is looking at, like, let's take out trend for a second. Let's take out COT data for a second. Let's take out retail sentiment, all that stuff. Let's just look at the economic data of the two countries. And so we take a look at like Kiwi dollar, that's getting a bullish reading. And if we actually filter just for major currency pairs, this is pretty much going to tell me where I am with the dollar, which is still pretty bearish on the dollar. You can see Kiwi dollar, Aussie dollar, Euro dollar getting positive scores, and then dollar CAD, dollar Swiss, dollar yen getting negative scores. So based off this list, the ones that I'd be looking at for possible setups would be shorts on dollar CAD or longs on Kiwi dollar, basically taking the other side of the US dollar kind of trend in economic data. So it's not like a huge conviction for me though. Like it's not like these are massive, massive, underweight scores for the dollar. I would just slightly lean towards a bearishness setup for the dollar, but I'd probably have to see some pullbacks before I get into that. So do I think, maybe dollars headed back to that 100 level? I think that could be a play, but it's really about the specific currency pairs from there. What about you? If you were to trade the dollar, would you be bullish, bearish, and which pairs would you be watching?
So for now and until tomorrow, April 2nd, right? That's where the big catalyst comes into play and where we would see some volatility. My time catalyst, and then it can snap right back. So my time horizon on these trades have been small in nature. Like on my weekly outlook, I showed my euro dollar position. I'm probably like 5 pips into profit. I'm pretty much at the break even line. Dollar yen has been pretty good to me so far, but I do plan on kind of just realizing these trades by tomorrow, and then because we have NFP as well coming up as well. But yeah, I saw the new EdgeFinder, eco thing this morning, and it was new to me, and I like that because it kind of puts the ball in the player's court when it comes to their technicals, because the technicals can be very subjective,
Yes.
depending on the individual. And we have all kinds of traders in here. We have short term, longer term. So that's really cool. Because also, one thing I did notice is like with the EdgeFinders, newer people, I would say, kind of think of it like as a timing tool.
Yep.
Their own homework, right? And I can pretty much say that I strongly believe everyone here is pretty much really good at their own technicals. I feel like they've mastered their own way of looking at things.
Yeah, that's exactly why we've had a lot of people who have said the same kind of thing. So like, as you pointed out, you ask 15 different traders, how they mark up the charts, you're going to get 15 different answers. Some people like to trade reversals. Other people like to trade breakouts. Other people like to trade fib retracements. Everybody has their style. So yeah, that was the demand, right? A lot of our existing EdgeFinder users, especially during the free week that we offered last week, we gave people the chance to try it out. And that was the feedback, was like, look, the technical trend filter that you had, I'd rather you keep that score off my screen because I don't trade the same way as maybe you guys' trend filter. And I was like, that's totally valid. We kept getting that response. So we're building some custom scans that will allow people to basically not have the trend column. And then we're also going to build a retail or a sentiment focus as well for people who really want to focus in on sentiment data, like commitment of traders, retail positioning, put call ratio, all that stuff. So like you said, EdgeFinder is not something that's like a one strategy. It's meant to be used by many different people with many different styles. So yeah, I think it's exciting. It gives people the flexibility to use EdgeFinder how they want. And ultimately the EdgeFinder is not, like you said, it's not a timing tool. It's a scanning software. And many people don't struggle with technicals. They struggle with the fundamentals. They struggle with, the other pieces.
No, I think that's probably my favorite update in the last, I'll say, for this quarter here. But one thing I did struggle with, and I guess you can address this to myself and the audience, the flat earth tool, I couldn't find it.
It's coming. Don't worry. Yeah. If you guys are not sure what Alan is referring to in the video that I put out today, which if you haven't seen it, I won't spoil it for you. Go watch it. I did leak a little information about a brand new flat Earth indicator coming to EdgeFinder. So it's coming soon. Stay tuned. Fingers crossed we'll have it soon, and everyone will officially see that the Earth is flat. Anyways. We've got about 1 minute to go here, Alan, before we get manufacturing PMI data. I've just pulled up the screen just so we can watch the data together. We've got S&P 500, NASDAQ, Dow Jones, Russell, gold, dollar, oil, and Bitcoin all on the screen for everybody. I'm just going to react to the numbers here with you, Alan, and then I'll get out of your hair and let you go solo for a little bit if that's cool. Alan, I think there's a slight connection issue or something, because I think your mic, I don't know if it's your microphone or your audio, but I think there's like gaps sometimes where we can't hear you. I'm not sure why. It's weird. Anyways, we got our breaking news coming in. Okay, data dropping for JOLTS job openings and manufacturing PMI data coming in hot here. Let's see what we get. Oh, we lost Alan. Initial push slightly higher for NAS. For gold, dollar index, still waiting on the data. Okay, there it is. Manufacturing PMI coming in soft here today, guys. 49. Dollar index slightly lower off that. What about JOLTS? Still pending on my side. Still waiting, at least on Forex Factory. Okay, there it is. Lower than expected JOLTS job openings and lower than expected manufacturing PMI. So some soft data points here this morning. Would not be surprised if we do see bonds reacting positively to this. Yep, there it goes. TLT up and away on this data. Again, yield's going to be dropping. Probably not a positive thing for the dollar index, but we're really not seeing too much of a move here. But yeah, we did get, again, like I said, softer than expected manufacturing PMI data and JOLTS job openings with minor revisions. I mean, that's a pretty soft day here in terms of economic data. 49 shows contraction in the manufacturing part of the economy. There's the dollar index on a 30-minute chart, 1 hour chart, mostly unmoved. Not too much of a spike in either direction. Stocks are modestly lower off of that, but really not a huge move there either. Here's your 1 hour chart. If it will load, there it is. You can see 1 hour chart, pretty unchanged for NASDAQ. Huge slide here recently. Bounced back a little bit towards the second half of the day yesterday, but still just it's been a rough couple weeks for markets here. Internet went out on my PC, but not on other devices. Sorry to hear that, Alan. That's frustrating. We're going lower with that data. It's definitely not a positive point, right? Definitely not what you really wanted to see out of JOLTS job openings. What people I think were looking for on the stock market side for like a strength, for durability, we'd want to see this number come in higher, right? Manufacturing PMIs, same thing. We want that number to be higher than expected. So we actually are getting the opposite, right? We're getting some softness there. I would argue mostly a bearish thing for the dollar index and a bearish thing also for stocks. Stocks, I think, there's this ongoing debate. Some people are more thinking that the Fed is going to fixate on inflation, and others are wondering if they're going to focus more on growth. Growth pertains to jobs, PMIs, consumer spending, the state of the consumer. Inflation is obviously prices rising. There's a good argument you could make that the Fed's going to focus on either, right? There's a good argument you could make for both sides. I'm curious, what do you guys think? Any fundamentalists in the room? I'm asking you guys for some help on this. Okay, Fed has got problems with inflation staying sticky and signs that growth may be starting to weaken. Jobs data, the consumer pulling back on their spending, GDP growth expectations lowering, inflation, right? CPI, PPI, PCE, these numbers going higher, showing prices are problematic. I want to ask you guys, which do you think the Fed is more focused on? Inflation or growth? That's kind of a trick question because the Fed focuses on both, right? They have a dual mandate. But I'm curious, what do you guys think is more important to the Fed? Is inflation a bigger problem or growth a bigger problem? What do you guys think? Growth, inflation, jobs, growth, inflation. Can't focus on growth with tariffs, inflation, growth, inflation. We've been through inflation. And this right here, guys, this right here is a very important point that I want to make. Does anybody not have some PTSD from inflation in the past few years? I think we all had a little sticker shock, right? I don't know about you guys, but I remember, I'll never forget this the rest of my life. And I bet a lot of you guys are the same way. I'm fortunate to not be, at a point in my life, paycheck to paycheck, but there's a lot of people who are. And even as somebody who is not, I still remember going to the grocery store and being like, oh my gosh, everything just went up in price. Like literally 2 weeks ago, I went to the grocery store and I spent, $70 and now I'm spending $81, right? Something like that. Like that materially, you feel that. I think everybody has a little PTSD from inflation. And that's in the United States where we did have inflation, but God forbid if you're in other places that got it much worse than the US, right? At least the US has the global reserve currency. We can print the currency and use it first before it gets exported everywhere else. We saw inflation like 10% for the UK. Those were dangerous levels of inflation. So the Fed and everybody else has a little PTSD about inflation. But people forget 2008 was also very ugly. When people lose their jobs dramatically, that can send everything into a horrible spiral. The Fed's in a tough spot. I don't really know the answer to this. Growth is slowing, but it's not at recession levels. So maybe they have a little bit of room to let growth weaken before they act. But I also think that they're not going to let it go too far. If jobs data starts to materially weaken, they got to focus up on growth too. So it's a tricky debate. But yeah. Anyways, welcome back, Alan. We can see you, and I think we can hear you too.
Well, I hope so. It was a driver error. I have my Wi-Fi is connected via Bluetooth, which is not ideal. I wish Ethernet, but I don't have that capability. But good to be back. If you want, I could relieve you for a bit. I know we have Chris Pulver coming out pretty soon.
Yeah, sure. If you wanna take over for a few minutes, go over whatever you'd like. Before I step out, if you guys do want to keep up with Alan, we'll drop the link to his YouTube channel. I highly recommend if you're somebody who's interested in Forex, especially if you're interested in economic data, if you're interested in keeping up with a good mix of technicals and fundamentals, highly recommend checking out Alan's YouTube channel, and we will go from there. Also, quick shout, like I said, EdgeFinder Sale of the Year event is happening right now. We'll drop the link to send us a direct message if you want to take advantage of the 45% off pricing that we are doing at this moment. Alan, I think you froze, but are you still there? Can you still hear us?
Jesus. Yes, I'm here.
Okay. Well, I'll stay on the line just in case, but we can at least hear you and we can see your screen. So we'll let you go for a few minutes, and then we'll have Chris Pulver up next after you.
Alrighty. Well, I'd like to, utilize my time as best as possible. I know the audience really likes to go ahead and look at some currency pairs. So I only have 2 currency pairs. And then after that, I'm willing to go ahead and, look at what you guys want to see. Maybe I can give you my thoughts and opinions on it. But I pretty much have 2 positions on. I have the euro dollar and I have a dollar yen short. Euro dollar, I really liked because we had really strong momentum here. And we are in this range, it seems like. And usually when I'm going long or short a pair, I want to make sure if I'm going long, I want to enter at the bottom of the range. Really kind of just, it can be annoying. It can be hard to deal with. So that's what I like to do. And on the euro dollar, we saw that we have this 200-day moving average. Price went ahead and tested it to the T. And if we just look at a fib from top to bottom, that's not a fib. We ended up testing it at the 38% retracement level. So technically, I really enjoyed that. Strong momentum, brief pullback. And if we just zoom in a little bit into the 1 hour, we can see, and I'm finally getting some, finally in the green here. I was in a little bit of drawdown last night by a little bit. Um, on the 1 hour time frame, we had this downward trend line here, and then we broke it. Now, what I also really like to see is that we broke it and we almost retested it to the T. So that, on a technical level is really good to see. All my stops, and then we could probably target the, really recent highs on the higher time frame. That's the 112 level. Now, I know that this trade can be pretty tricky because of the environment that we're in. We have a lot of news catalysts that always hit the screen, a lot of uncertainty. So we could see some back and forth within this range. And so my time horizons are really, really short. And like I was mentioning earlier with Nick, I might close this trade out for a profit before the end of the day, because April 2nd will be the day that, there will be some more volatility in the markets. And also we have NFP coming in this week as well. So let's say the move continues in my direction that I thought after I close the trade, well, then I would just use technicals to find a really good re-entry zone. And pretty much the same thing for the dollar yen. Upward trend line that got broken with some strong follow through. And so now I'm in a little bit of profit here as well. I'd like to see if we can, hit this recent low here. And if we break past that, then I just trail my stops. And then if I get stopped out, so be it. Alan the Great pondering the universe. Alan the Thinker. I would have already hit my PC if I was Alan. You know, it's quite annoying that. So here's the thing: all my other devices are working properly, and my girlfriend is home with me. She's working from her computer, and she has none of these issues that I'm experiencing. So my dilemma is I need to figure out where the problem is, because I don't have any internet issues any other time of the day. Sometimes something to do with the camera and the streaming, which I'll try and diagnose. But yeah, this is a LNU computer and hardwire the internet to computer. My home office doesn't have an Ethernet port, which ideally I would love to have. So I'm using like a Netgear Bluetooth Wi-Fi adapter. Which is better, UJ or EU? Out of the two, I'd say euro dollar, because it had a fresh catalyst. So my thing with the yen is that it's really, if we just pull up the yen index here, long term, super undervalued. I think we can all agree on that. However, Bank of Japan, their stance has kind of cooled off, and what I mean by that is they're no longer like extremely hawkish. That hike rates, and so that was pretty much the premise of this big move, is that the market was like, well, the yen's very, very hawkish, Bank of Japan, but that kind of died down. So when you're thinking of the two, I'd say the euro has the most fresh catalyst, and that would be their European spending. And that was a really impulsive move. That was like 500 pips, right, in about a week or so. And the move has pretty much held up. Usually when you get a move like this, you'll get some kind of mean reversion and come right back down. But it seems like we're pretty much holding this level. And so I think out of the two, euro dollar is probably my favorite one. But actually, look at my previous question. When I stream Mega Stable, you can hardwire the internet to the computer. Okay. Euro Aussie. think you have a sell order. Yeah, I really want to go ahead and try to fix this for next time, because I hate to have these problems. Euro Aussie, your sell order is at 1.7364. Okay. 1.709. Okay, so you're trying to target the bottom of this range. It looks like maybe we did form a range. And let it breathe. I do think, my opinion is that the euro will continue to appreciate. So it's a little against what I'm thinking of, but you have a really, really good entry, sniping gods. So I think you're fine. Oh, Bashi, yes, I also agree. I do. Well, I know it's hard to say, but bad news would go ahead and propel my trade idea. Buys on euro pound. Yeah, I took a euro pound position when Nick went ahead and did it. I did small size because euro pound is not a trade that I take actively. It looks like we are reverting. Supposed to be up right here, so I'll go ahead and head out pretty much shortly here. But yeah, we tested the 61% retracement level, and we're getting some bullish momentum on the euro. But I believe Chris Pulver is coming on here, so I'll leave you guys to it. Thank you guys so much. Hopefully next time my computer doesn't give me problems and I can spend more time with you guys. But thank y'all and have a good one.
Thanks, Alan. I'm going to fill in while we wait for Chris. And I just wanted to make a quick shout out in the audience. We have our very first ever member on our channel. I hope I say your name correctly. You have a really nice profile picture, by the way. It's a professional look. Bulent, Alan, it seems screen sharing works without any interruptions, so the problem is coming from the camera and microphone. Definitely helpful. If anybody has technical support comments, please feel free to leave them on the video or chat them to the thing. We're not the most technical savvy in the world, trying to figure out, and hopefully we can help Alan with his technical difficulties. But also just a thank you to Bulent for becoming our first channel member. Bulent and anybody else who does become a channel member, the reason we created this is because when we are doing streams, right, there's a lot of questions that come in, and I do my best to look at them and to answer them. But we wanted to make a way for people to prioritize their question. So, Blint, if you have any questions, feel free to ask them, ask the way, and I will do my best to prioritize those questions. I'll, of course, answer as many questions as I can, but especially if it's from a member, we're just doing that as an extra thing. If you want to buy us coffee, we'll try and answer more questions from you. I think it's like $5 a month. Anyways, just want to talk briefly here about a Kiwi dollar trade that I'm looking at. The New Zealand dollar looking strong in a lot of our economic heat map stuff here. I'm watching it. I kind of like it for a possible trade here to the upside. If I take that trade, I'm going to share it inside of the Discord in just a moment, which, by the way, we are going to extend our discount on the memberships as well during this time. We are doing a 45% off discount currently for the EdgeFinder, but we're also going to extend that to Discord memberships during this time if that's something that you're interested in as well. So I'm going to go take that trade, I think, and mark that up inside of the group. If you're not inside of the group or would like to be or want access to the EdgeFinder during the sale event, we'll drop the link here in the chat. Get the EdgeFinder 45% off for a limited time by speaking directly to our support team here at A1 on our website, a1trading.com. Up next, Chris Pulver taking over the show. He'll be in just a second, right after this quick break.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Tuesday. Welcome back to the show. Here we go from a wild Friday to a wild Monday to things calm before the storm with April 2nd, Liberation Day. What I keep reading headline-wise is something to the effect of Trump knows what the deal is. He's not going to reveal it. It's all about Tuesday. I actually priced out something. I didn't take the trade because I think that implied volatility is a little bit higher. So buying direction is not great. It'd be like a $780 risk for like a $300 profit. So a little bit backwards. But I'm just as curious as everyone else. Like, what is price going to do tomorrow? Are we going to see prices come back down to revisit the lows? Are we going to see this little correction for the end of the quarter offer any type of move to the upside? Is this going to be a buy the rumor, sell the news? I really think it depends on how firm this message sounds tomorrow. We had ISM numbers today. Everything else is low impact for the remainder. Here's tomorrow. Trump is on the economic calendar. Like I said, this is the first president that's been on the economic calendar every week since pretty much she's been elected. So I'm not sure when exactly this news drops. It could be right around 12 noon Eastern time. I'm not sure, but it's certainly making the market anxious. Like, what does it mean? I mean, technically, we're at some key levels. I'll repeat this. We'll go top down. But I would say because of that gap yesterday, is this showing slight bullish divergence? And I thought, yes, on the technical side, it could be. If the bears are going to crack these lows, there is, I'd say, kind of one little step for this market to go higher from these immediate lows, and that would be a bear trap. So that would be a move to the downside and then a bear trap where price comes back up and in, and then we can kind of recalibrate back towards this 200 moving average one more time. I still think this is maybe setting up for a high to low, any type of bear flag. I don't know if the market's going to be that technically obedient about it. I think this could be just forward pricing, lots of uncertainty. My biggest concern is that the pain just gets worse and uglier. If we talk about this from like a flag stance, just measure this move here. Let me box this in. So let's go, where's my drawing tool? So if I go high to low, box that move in, and we go to symmetry. I know I got a bunch of boxes on here, but let's say this is what we did. High, low, lower, high, lower, low. If that's the destination, that puts us down to about 5,200. Okay. If we overshoot that, I know this is a lot, but this would be an overshoot. If we went from about 5,200 would be symmetry, but we could go all the way down to about 4,800 with previous resistance becoming support and higher volatility kind of scaring and what might feel like what a capitulation move might feel like, right? So it doesn't go in a straight line necessarily. I mean, we could go break here, pull back again, break again, pull back again. We could do all sorts of stuff and it just kind of waits. But do you think the market's going to move slowly? I don't. I think this market, if we're going down, it's going to go down fast, ugly. It's going to be scary. But I think that's what everyone's so freaking worried about, that it's like this market might not go anywhere. This market might just stay right here. Bulls can't do anything. Bears can't do anything. We're not, this would be recession. Like, I don't know. So the recession talk, the stagflation talk has to come with job numbers, which is going to be Friday. So I'd say for Friday's news, it's going to be fairly important that we see a stable print out of non-farm for the U.S. Forecast for 137, it's pretty lackluster. But if it's a whiff, or if it's like I can't remember the last time I saw a negative non-farm payroll. I mean, we've had positive jobs for a long time. This would be January 2021. That was the last time we showed a negative number. From what I'm seeing, this was a November 2024. It was positive what? Positive 16,000. So way off forecast. But let's see where this goes. Let me stretch this all the way out here. All right. Anyway, non-farm on Friday. So Trump tomorrow, non-farm on Friday. A lot of speakers on Friday too. Powell speaks on Friday. Not sure what he's doing. Economic outlook. Okay. Interesting. Some more members, Fed speakers talking on Friday. Could be opposing views on who's right, who's wrong. Okay. So that's it. Top down. Let's go. Markets are red today, just by a little bit. They came back pretty firm. I'd said if you're follow the last couple of weeks, I said that big JPM whale level is 55.65. We went below it. Hedges are right there to float back up, and they did. They successfully pushed it back up above 55.65. The close yesterday was around 5600. So close 5611, cleared that hurdle by about 40 points. And I was actually looking out to see, roughly speaking, where the Q2, and I'm going to see if I can spot this like, over the next couple weeks. But basically, I'm looking at a 20 delta put. Should be around like 5150 or so. Yep. So this is the option chain going out to the end of the quarter. So going out to Q2, June 30th, we're looking at about a 5145, 5150 strike. So I would keep that number in mind for some potential bigger picture support by the end of the quarter, right? So that's what I'm saying. Like, just based on the technicals here, if the market's still going to go lower by Q2, I would imagine that we're still greater than 5150 by Q2, right? I mean, it's a pretty common thing. It's every quarter, roughly 20 delta. From what I could extract in some of these other examples with this, it's basically a big fund inside of JP Morgan, and they just kind of pin these monster levels of calls above and puts below, and they line up pretty close to the 20 delta. Okay, so I would say by Q2, even if we're down to that low, if we shoot through it, we're probably going back above it. So to me, 5,000, 49, 48, those are big buying opportunities. If we are offered them, I will certainly be taking some bites and seeing how this potential bottom might fold or form. I don't know if this market's going to be a bear flag. I don't know if it's going to be choppy. I don't know if it's going to get worse. So I do have hedges on to August, September, have hedges out to December. This 5,500 level is very, very critical on the technical side. XSP watching this closely this week. I want to see if we get back up to 560 this week. I've got some trades running that'd be a nice line in the sand to get back above. So set a chart alarm there. SPY, open lower, flash lower. I did see some slightly. Let's go to this workspace here. Let's go SPY. Gross. These charts are looking messy. All right. Let's zoom in here on the daily chart. So daily chart, all the indexes hit oversold conditions when we had that March 13th low. Right now, our peak to trough, high to low is around 10.7 on the SPY. And I think we had like a 15.3% correction in the NASDAQ. So from high to low so far, I mean, 10+% correction in the S&P, 15+% correction in the Qs. It's not year to date because we started off the year a little bit lower. So, year to date doesn't seem like it's down as much. But from high to low, like, that's a notable correction. So what I was looking at here was potentially some hidden bullish divergence. I say potentially because I wouldn't want to be sitting here guessing like, oh, the low's going to hold. If it doesn't hold, I'm not trying to get away. That'd be defined risk if I'm trying to get that floor. So I put in a trade yesterday around the 555 zone to see if that will hold and kind of push up for the next couple of weeks. Even if we come back and revisit the 2-week pullback. So low March 13th, we peaked out on that Tuesday, the 25th. Just this is typical what happens when we have, by the way, when we have bear markets, if we have bear markets, usually a bull rally, it's about 2 weeks. So that was a 2-week rally right there. If we kind of hold the lows and we have another kind of 2-week rally here, who knows? That would be that kind of bear flag. And look, everybody's going to see it. It's almost too telegraphed. But I would say if bears see that, self-fulfilling prophecy would be bears are like, yay, we're going to take this thing much lower. And then you measure it, and then you're talking, that 5,200 SPX level. Okay. So from the daily chart, hidden bullish divergence, momentum also showing some divergence. Let's go to the Qs. Same thing here, slight divergence. Now, keep in mind that the relative strength, this is the 21 period, it's not quite oversold. If you go to a 14 period, it did get oversold. Go to a weekly chart, we're not even close, right? Like weekly chart oversold levels, not even close. If you change this to a 21 period, I'll go to the 14. Okay, not even close. So from a standard relative strength index, we're not oversold. Momentum is not disagreeing. On the daily chart, seeing a little bit, slightly, subtle, just not, still not oversold. So weekly chart, not oversold. One more thing, let me go back to 21 here. Okay, and let me go back to this workspace. Have a look at the weekly chart and some of these moving averages. Here's an example. Okay, the weekly time frame, just zooming out for a second. I don't think anybody be surprised if we go from this low, which is a COVID crash low, to this high. Let's call that impulsive wave 1. 2022, it's crazy to think like the entire bear market for 9 months was a wave 2 pullback. But then once we get out of there, this is wave 3. And wave 3 is completing or completed. And now if we're in wave 4, I wouldn't be terribly surprised to see wave 4 either, be a chop fest pause where this is going to be a very difficult window before we go higher, or wave 4 could be a pullback where it's high, low, lower, low until we find this level. This would be a wave 4, and then wave 5 would be once we get out of this nonsense where we can still go. So, this wave 5 might be a 2027 projection, maybe a 2028 projection. Look, wave 2 took an entire year. It was 9 months. Wave 3 was the bottom in October 2022 all the way into our current high. That is over 2 years of trading. So, from the bigger picture, we could be years away from hitting, basically 7,000 plus. But it's relatively clean technicals. It's just, are we getting a wave 4 that's more of a pause wave 4? Are we getting a wave 4 that's a pullback to retest, last resistance level becomes support. You look at all my moving averages down here, it's showing a lot of dynamic moving averages right in here. So, I could see the market having some bounces, but, as they say, the bull rally is going to be sold in a bear market until we find major support. And then I'd be looking for a bottoming pattern. Look for a bottoming pattern. It levels out, pauses, starts to make higher highs, higher lows, and then we're talking all-time highs. Okay, so that's big picture. Today the market's relatively calm. I thought today was going to be relatively calm because we have so much news and anticipation for tomorrow and Friday that today's probably a good day for some premium selling. So I'm going to take a look here. I actually might do a bear call spread. 56.30 would be the high from yesterday. Let me see if I can get something pinned. So call fly high yesterday was around 56.30. See if I can take this up here like 56.50. That's not too bad. 5640. Highest today at 28, lowest today at 57. We'd have to have a 90-point rally to get up to 40. I'd like to kind of pin this thing at 45. Let me see if I can get filled here. I'm going to move this to 45. Let me see what that would be point-wise. I might do a broken wing here for like 40 or 50 cents. So 56.40. Can we make a fresh high in the day? That might be a tall order. I could see price just being like really choppy and decisive until we have more clarity out of the market. I don't know why the market would necessarily be front running Trump's tariff talk tomorrow. So let me see if I can get filled here for, 50 cents is decent. Let me take this trade. The premium really drops off though. So that like 45 level, I'm going to wait on this one. I'm going to go 50 cents. Try to get filled here for 50 cents. So it's going to be a pending order, broken wing butterfly. I'm buying the 56.45 call with one contract, selling two at the 56.50, and then buying one more at the 56.65 for a skip strike. So the way that trade looks is like this. This is a, oops, let me change the colors here. So this working order is a +1. This working order is a -2 because I'm selling those two, and this is a +1 with a skip strike. So I'm looking to try to take in credit up front on the trade for 50 cents. So the trade looks something like this. Here's current price. There's my profit trap at the end of the day. There's my risk. So I have this. I'm trying to go after 50 cents. I would have a $5 profit trap at the end of the day. That would work out to be, this is 56.45 right here. And this is 56.55 right here. So my little profit trap is about a $10 window near the end of the day, like literally like 3:30 p.m. to 4 p.m. That's when you start to see price actually offer you some bonus credit. Deltas on that trade right now, they're low. They're a like 7 or 8 delta. So it's most likely going to finish out of the money, which is why I'd consider taking the trade in the first place. But I'm going to try to get filled at 50 cents, which means if price goes a little bit higher, then hopefully I get filled at 50 cents and I can sit on that one for the rest of the day. Probability would be I grab 50 cents by the end of the day. So we'll see. All right, so that's pending. If it fills, I'll put it in the alerts. Okay. All right, so keep an eye on that one. 56.64. Let me delete that. And I will go 56.50 would be my pin price. Yes, okay, yeah. 56.50 would be my pin price. Okay. Want to see if XSP can get back above 560 or so. SPY, we'll keep an eye on this one. Qs, slightly green on the day. Well, green candle rather, but down. Well, that was quick. I just got filled. Well, I guess I'm in. Okay, so filled for a 50-cent broken wing butterfly. All right, let's see what happens. We get this posted. SPX4-1 expiration. Buying the 56.45 call. Selling the 56.50 call. Buying the 56.65 call. 50 cents credit. This is a broken wing call fly. Price would need to rally above yesterday's high. by 22 points. Actually by, we'll say about 30 points. $0.50 if price is less than 56.45 by end of day. $5 profit trap between 56.45 to 56.55 and a 950 max risk. If price is greater than 56.65. Okay, that's going in to the, I'll put this in index trades. This is just going to be a 0 DT, which I don't do a lot of these, but I like it. I'm getting filled. We're doing it live, so I'll put it in. So this is 0 DTE. I'll build this trade out really quick. So there. Okay, so 1, 2, 3, April 1st, 56.45. So I'm buying a call there, selling 2 calls at 56.50, and buying the skip strike at 65. So that's what it looks like. Okay, this is real price right here at 55.96. Okay, trade is in. Okay, let's go Dow. Dow, actually, I looked at a trade on the Dow last night. I'm going to see if I can price it out. So I wouldn't mind scooping up some shares of the Dow. I mean, I know that if we roll into like a nasty correction, the Dow could still be down. It's down from high to low just around 9.8%, which for the Dow is a little bit more than I thought. I mean, the S&P corrected like 10.7%. This is down 9.82. That's pretty volatile for the Dow. So anyway, I was looking at a 111 trade. I'm okay owning some shares. I would put in, that's a key level of support. If I was willing to take some shares, to be around 370. So I wanted to address that. Man, this is such an inefficient move on the Dow, though. That level right there, it's like I think we could bounce, but this market might kind of chew into that inefficiency if we end up having a correction. So anyway, let me look at it price wise. So 370. I'd only go out about 40 to 60 days on it. Let me see what the premium is. I think I had it priced in yesterday to be about $1 of income. 45 days out into May. And 370 is a pretty key level. Let me see what this looks like. So if I went 370, 65, and 60, you get 74 cents. Move these strikes there. 85 cents. Yeah, this is about what I priced in yesterday. So it's, I don't know. I got to be willing to own it. If I did take some shares at 370, I would own it around 364 or so. So I'd be assigned at 370. Right now, that probability is very low to get that assignment. I mean, I've got a 97% chance of profit on the trade. IV's pretty high, though. I wish I just got more premium for this one. Let me see. I mean, it's just not offering me much more credit to take on a bit more risk. So I don't mind that trade. Let me go out a little bit farther. So 45 days is okay. I'm going to go out a little bit further. Let me go out to June. Let's go to 90 days out. Similar setup, probably a bit more premium. So if I went 375 by 70 by 65, I like this a little bit better. So I go out further, 365. If I took on any shares, I'd own it at 360. That would be in line with a yearly moving average. That'd be previous resistance. That's way down here. Could I stomach the assignment? Yes, we'd have high to low 360. I mean, that'd be a 20% correction on the Dow. That'd be a nasty, nasty bear market if we get it. So I'm going to take this trade. Premium's good. 207 credit. It's a $200 trade through June. Little income. I'm going to pop this trade in. So this is DIA June 30th. And I'm doing a 1-1-1. So I'm buying a put, selling a put, selling a put. I would potentially take on assignment at 365. My ownership price would be around 358. Yeah, I like this trade. So that's a little bit more income. I like this kind of profit trap. All right, I'm doing it. Here we go. So 207 not filling, 205 hopefully gets filled. Hopefully over $2. Come on. I feel like I did this exact same trade last week and it didn't get filled and I didn't take the trade. All right, 203 just got filled. Good. 203 got filled. Next. 203 getting filled. Good. Okay, so that trade's in. I'll get that posted as well. Tracker. Okay, DIA. This is a June 30th expiration. Buy the 375 put. Sell the 370 put. Sell the 365 put. 203 credit. Willing to own if assigned. That'd be about 20% DIA correction. And that break even would be, I know, lots of snow last night. 365 minus 5 minus 2.03. So 357.97 is my break even if I'm assigned. All right, trade is in. Get that posted. This will be also an index trade. DIA. Okay, let me build that one out real quick. So this is a June 30th. And these are all puts. 1-1-1. So it's a buy one, sell one, sell one. 375. 370. And 365. There's the trade. So one standard deviation move gets me down to about here, around 390. Most of the time, about 70% of the trades will stay within that one standard deviation. So we'd have to have a pretty excessive move to the downside. I still have a profit trap. This is my 375 strike. This is my 370 strike. And then this is my 365. So my risk is I could still make money on this trade with a break even all the way down to like 357. right? So probability is, here's my $2.03. That's filled. If price stays where it is, keep 203. Price goes up, keep 203. Price goes down, keep 203. Price goes down 1+ standard deviation. Well, I've got a profit trap. This will be closer to expiration, but watching. So we'll find out. So we get a screenshot of that one and get it posted. Okay. Trade is in. Russell. Actually saw some divergence on the old Russell daily chart. Again, could be a bear trap right around that 20% handle, maybe. So these trades, the only thing I have, these are close for profit. So the only exposure I have in the Russell right now is some own shares around 190 with covered calls that I'm rolling down. I've got like a 220 or 224 covered call, and I'll just keep kind of working this lower, collecting premium. It's usually like a 30 to 60 day covered call, but I'm just going to hang on to the shares for right now. If the IWM responds, with this being a chance for the market to rally, maybe. But if we don't get any clarity out of the S&P and the Qs, the small caps aren't going to do anything. So I don't believe that the small caps will be like this one glimmer of hope while the market is selling off. So point is, if we have a broader market like S&P's up, Qs are up, then yes, the Russell has a long ways to play catch up. But where's a more attractive level to play the Russell? In my opinion, it would be down here. If we come down to like 170, I'm setting up some premium trades. I'm playing the Russell for a range, a bigger range. But I did take some stabs. I had profits in March, March expiration, and even May. This trade worked out just fine. So it's obviously a support level. If it holds, great. If it doesn't, I'm not going to flirt with the floor there, but I'm going to trade it down here and see if I can just sell premium. Okay, let's go dollar index and VIX. VIX is up in the 20s. Let me look at term structure. I think we're still. Okay, so we have a little bit of backwardation through April, May, which it makes sense considering we've got tariffs and we have non-farm. So a little bit of uncertainty in the near term. Very flat and kind of persistent volatility for the next. I mean, this is going to change. Like if the market starts to rally, this will start to look upward sloping. So this will go back into contango, which looks like this, right? We'll start going that way, but we need to get through this first uncertainty period where there's more volatility and uncertainty in the near term than there is the longer term. But we are still quite elevated. If you're interested in selling premium, statistically, again, if we have another push higher in volatility, I think the crazy part is what we had happen in 2024, which was that August vol event over a weekend. That was our Fed day, I think the second or third largest single day move. This is one of the highest spikes on record of the VIX. So, I mean, I still like the idea of selling premium. Anything greater than 30, I'm typically looking at selling premium. This next go around, I may actually take on the shares of SPXY like I thought I would do this last week, or this last time we hit the March 13th low. I was tempted to buy some shares of SPXY. I was actually tempted to sell puts for about $500. But I didn't because it was I was going to sell like 3 or 4 puts, but it was going to cost me like 20 grand. So I was better off just like, hey, I'll just buy. If I just bought shares and get a $3 to $4 move, I'll just take the income that way. So that's probably what I'll look to do if volatility goes up. I'll see if the SPXY can come down, offer an attractive price, and then get long. So that'll be on the radar for something to watch. Dollar index. I still think the dollar index is going to be a big story for 2024 or 2025. If it is a pullback into here, watch this area. I wouldn't be shocked to see the dollar dropping. I think Trump and co want to see a weaker dollar. The complete opposite would be like dollar gets stronger. along with gold still doing well, or if the dollar gets stronger, gold finally starts to fall. Right now, though, I don't know why this would be a low in the dollar. Right, this is major support. If we just look at a simple trend line break in here, high, low, it can consolidate for whatever it needs to do. But as long as we don't do any technical pokes above like 106, I'd still be looking to short the dollar. So does this break and go lower? If so, coming back to this breakout point, does the dollar return to 101 or 100? That is why I'm long the euro, actually, because if the dollar does in fact slide lower, then my euro dollar position probably heads up to probably 112 or so, 111.50 to 112. Oil pushing up. I didn't love this. I still think this floor is going to be tested. I don't think this is done. Be careful on oil. There's just a big floor there. Plus, we have lower highs. So just be on the lookout. And I don't know when this is going to happen, but I will say that if oil, we can either reject off this 200 moving average, and that's a chance to sell it, or because let me go these highs. So resistance, 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 resistance. If oil were to come back into, let's say, $76 to $77, looking for opportunities to short oil there, might not be a bad play. I don't see oil going a big squeeze to the upside. I think it's pretty well contained. Threat to slow down. U.S. is wanting to produce a ton. So is Saudi Arabia. This floor has been tested many times. I don't believe this is a triple bottom. No such thing, right? This to me is a floor that's likely going to break. So I now I kind of have a trade that I like on oil, which would be if we return to some resistance areas, something like that. I'm looking for like $76 or $77 to give us a chance to short. So probably looking at some CL bear call spreads or some type of even bear put spread, but try to drive this price back down into the lows. Okay, USO, similar. Oil futures waiting, kind of the same structure here. Nat gas, UNG, I'm still long UNG. Gold, 31.28, new highs in the day. Indecision candle doesn't really mean anything. Gold could still be ripping to 32, 33. This momentum is as strong as I've seen, any market. Obviously, it's not just making insane percentages, but it is moving. Gold is up in that last little stretch since what? Since the end of March. The last couple weeks in March, we're still up another 4% in gold. So again, really overstretched on the distance away from the 200 moving average. Doesn't mean that's the top. It just means that I could see either this running hotter. I will say this though. I'll point a number out. Chart alarm 560 for XSP. Yeah, baby. There we go. Checking this really quickly. All right. Still sitting on some of these XSP trades. I want to see if we can stay above 560 by the end of the week. That would be kind of nice. Okay. So if gold runs really hot, I'll put a number out there. Based on this move from the current 200 moving average, we're stretched about 17%. Let me try to get that as exact as I can be. So here's the 200 moving average, right on it, about 17% higher. I would be shocked if we can get to a 20+% move above the 200 moving average. So I'm going to mark that and go from 20%. That puts us right around 32.17. So I'll say this, 32. I'll label this. Let's go 32.17. 32.17, 20% extended from 200 EMA. Okay. So, I mean, anytime we've seen like a decent, like 12% overextended, 15% overextended, we see some type of pause cycle. Look, it can certainly happen. We could go through this and we could blow through this. But if we move aggressively through that kind of 20% stretch zone, I'm going to start moving stop losses into my gold positions and start to protect the profits. Because at some point this will top out, and at some point that top's going to be at least a correction. And I think at some point we have this move that will be targeted. This will be a reversion trade at some point. I just don't know the catalyst on why gold would start to fall. Could be a dollar story. I don't know. It could be. I don't think it's going to be like more certainty in the global economy, because we certainly don't have that right now, right? So anyway, I'll just kind of note that as like that 20% overextended move. All right, silver. I'd like to see if silver can climb to some new highs, and silver from all-time highs has plenty more room to get to the 40s, which I'd love to see it. Bitcoin, we're trading at 84. Still a good gauge of risk on, risk off. I think this 75K, $70,000 area needs to hold. Like, it needs to hold. If it doesn't, there's a lot of potential damage to be done on Bitcoin. But strong support back here in 2023. Support again with our consolidation we had pre-election last year, and then another key area around that 70 to 74K mark. If we just, I mean, if you think about time alone, if we just get time to go sideways and it doesn't really do any major bearish moves, then I would say technically it's like this looks like we can round out some lows and start to see this thing revisit the highs. But we'd have to see something to the effect of a risk on rally. MicroStrategy at 294. Okay, Coinbase at 173. This 111 trade closed out for profit. This was closed for profit. This one I moved it lower, so I have one that's only out for another few days, another 16 days. This one's still running with a 155 on Coinbase. So Coinbase here. So if we stay above 155, this is only out 16 days. So right now I'm only up about 4% of my profit, but if we start to see it stabilize or even going higher, just time alone, 155, when we look at the strike prices. This is pre-earnings, and it's at the kind of expected move level, which is trading around a 20 delta. So I should be okay on that trade. There's about an 80% chance it stays out of the money, which is what I want. There's also that potential profit trap. So we'll see. Hopefully that's that should be a decent income trade. If it's a winner, then that's 2, 4, 6, 8, about $1,000 on that trade. About $1,000 on that trade. But I have to see if Coinbase will stay above 155. Okay, and that chart alarm is set at 155. Ethereum, wouldn't touch this until we break that trend line. Copper pokes all-time highs, reverting. We're going to see if the copper bull market is intact, then this would be an aggressive buy. So look to see if this previous resistance maybe offers up some aggressive support. Again, this would be another indication, would the global economy go into recession? If copper is ripping higher, probably not. Probably not. So that's the other case against the the global economy, the U.S. alone. It's I don't know if the U.S. can afford to have a recession. So we talk about this Trump put, Fed put. I think that it's way lower. I think we could have a ton of volatility in those prices for the equities markets to go maybe 20, 25%, 30% lower from all-time highs. But I think there would be an aggressive V bottom. Again, there would be crazy amounts of some type of fiscal or monetary policy. But it's way lower than current price, that's for sure. All right. Anyway, Japanese yen. If we have another Japanese yen event like we did in 2024, I still like long 6J. I can only go out. Let me check this one here. I think contracts I can only go out to September or maybe a little bit further out to October now. I guess I can go to December. But I don't love the area. So, I was thinking, so I was long Japanese yen here, and that worked out pretty well. I mean, I think it could go back up. I just don't want to take a position now. So I'll stay long FXY, which is like owning shares that would benefit from a stronger JPY. If futures comes back into a, let's say, a 50% zone, then I might look out for a swing trade into December. So this trade's closed for profit. I might look at a trade out to December and look at a swing opportunity with just an option trade. Okay, Nikkei. Nikkei is trading. Look, the Nikkei is trading a lot like the U.S. When the U.S. is down, Nikkei is down. When the U.S. is up, Nikkei is up. Maybe not today though. Nikkei is showing flat on the day. Well, no, I guess it is a little bit different. They're just trading a lot closer together than, I mean, you have a big separator between like Europe is doing well, China's doing well. That's about it. Like all of Europe is still hanging in there. But I think Europe's resiliency and continued growth is going to have to come with a stronger US market. I don't think the US can slip into a bear market without dragging things lower. So anyway, Nikkei, I still think this big range, this high, this low, if we end up at like settling back in here or coming back to retest the lows, is still a good buying opportunity, I think, in my opinion. DAX is hanging in there, but lots of dynamic support. Keep an eye on that. FTSE, same thing. Argentina, China, Brazil. Want to see if it gets above the 200 moving average. I'm repeating a lot of this stuff. MAGs. This is a big thing for the markets for, I'd say, the short term. We've had a 24% correction, I believe, on MAGs, which has been a major contributor to why the S&P and the NASDAQ has been down 24.5% from high to low. I don't know if this is able to do anything more than just fight back a little bit. I mean, if it's a bottoming pattern, then sure, MAGs can come to the rescue again after that aggressive rotation, but now things are on sale, valuations are more realistic, and they are still like really good companies, right? But I think for the U.S. market, you don't want to see lower prices on MAGs. They're still too big. They will drag the market lower. But I wonder if this like 24, 25% correction is enough to get this market to test the low, show some divergence. I think I looked at this on my other workspace here. Let's go MAGs. Go to the weekly chart, not oversold. Go to the daily chart. I think we hit oversold. So you can see the change from price here. Low and low in price, disagreement. So some hidden bullish divergence. I think I could see that playing out. Esther, you talking about gold? Yeah. So I could see some bullish divergence here. If we're kind of lucky on MAGs, then this kind of claws back into a low, lower low. Does this turn into like a little little bottoming pattern? Perhaps, maybe. So if you want to cheer on the S&P, or you want to cheer on the NASDAQ to go higher, I think you want to cheer on the MAGs. Because if this comes back and we have a fresh round of earnings and it shows that MAG 7 stocks are still doing well, still making cash, still beating earnings, that's probably enough to keep the markets pretty resilient with earnings expectations without having this really negative revision. Okay. All right, so keep an eye on MAGs. Apple is green on the day. Amazon fighting back as well. Broadcom, probably my least favorite. It's not a MAG 7 technically, but it'd be like that top 8, top 10. Google fighting back a little bit as well. Got some dollar cost average levels in here. This one's still in for some profit. We stay above 150. Meta bouncing off that 200 moving average. Probably not a bad play in the near term. It would be defined risk. I don't want to take any assignment of Meta at $600. I don't want to own the stock like that. If it was lower, then yes, but maybe not a bad spot to nibble. A bite here that goes back up to these highs. I mean, that potentially is a $30 to $40 move if we have some direction. Microsoft also bouncing nicely off the lows. This one is out just a couple more weeks. We're trading at 380. I've got a put at 370. Microsoft is here. So just in profit, but 370. Let me check that by 16 days out. 370 right before earnings. Okay, so there's about a 70% chance that stays out of the money. It could be threatened, but I would be willing to take some assignment and repair that stock if needed if it's back below 370. I will set a chart alarm again at 370, and that is a 111. Okay, so if price returns there, then I might be taking the assignment, which is okay. Netflix, broken wing butterfly above the high is looking good for profit. That I think expires in the 17th. Right there. Yep, so about 16 days. I mean, just has more time needed, but likely going to be a full profit. NVIDIA 108, fighting back a little bit, not much. A lot of premium sold at the 75-70 zone for me. Still have a collar trade on the shares that I own. Break evens around like 110. So I'm just sitting on shares. If they get called away, it's around the 125, 130 level. If we get another dump lower, I've got a long put that will help me hopefully lower the cost. Tesla trading at 272. I'll come back on Tesla. We came back and sniffed my covered call around 247.50. Probably not the time to get greedy, in all honesty. So the trade that I put in, got the assignment, worked my cost basis down to the 220s. If it gets called away this Friday, then Tesla should be good for a nice little income trade. Here is the position. You go to this account, for example. So covered call is positive. I collected another $40 on the covered call for literally a week. I did a roll from the 247.50 from last week to the 247.50 this week, and I collected another, chunk of income. It was like a $2.50 additional roll. I think I just am okay getting it called away. If it gets called away, I'll make like $6,000 on Tesla. It's been 2 weeks of trading. I'm okay with that. I still have income trades here. For 16 days out, if we stay above 255, right now it's showing that I'm upside down. So that's another reason I'd like to get rid of this stock for repair. If I repair this one for about $2,000 in profit, so this would be about 2K in profit here. So I'll take that. And then if I'm going to be assigned again, it's going to have to be below 255. Here's one below 195. Here's one at 245. So I mean, I'm just going to line up some income trades, if that's what I have to do. So I'm just going to take the repair, take the profit, move on. We'll see how it settles, but I don't want to get super greedy. And I mean, I guess unless the reaction is like the market just starts to rip Wednesday and goes hot, like let's say that this Trump stuff is buy the rumor, sell the news, and the market starts to rip, then sure, maybe I roll it for one more week. These income trades all look a lot better. 1 week at a time. If we go back up to like 280, 290, I know it's a volatile stock, but going a week out and being $30, $40 lower, I can just check the levels. I take that back. I wouldn't want to roll this any further than the 17th because I don't want to necessarily get in the way of earnings. In case there's a negative earnings on Tesla, that thing could drop another chunk to the downside. Could, maybe not. But yeah, if I was going to roll it, I would keep it within like the 11th or the 17th to collect the income and then not be stuck in the stock before we have earnings, or during earnings rather. Okay. All right. Berkshire pushing those all-time highs again. Good for old Berkshire. I still think it's a short. I think this is another one that the shoe's got to drop at some point. We have a reasonable bar count. Last time we had a 350 bar count. I mean, that was the S&P this year. That was the NASDAQ this year. That was Meta. That was Netflix. That was Costco. That was Walmart. That was a lot of stocks that I shorted this year for profit. Berkshire Hathaway is one of those as well. I'm curious, like, what would be this? Number one, like, why is Berkshire higher? Probably because they're sitting on 20% of their assets in cash. So the market kind of knows, like, oh, they're well positioned. But anyway, it's crazy how it doesn't look anything like the S&P. Bonds. Nice little rip on bonds. Okay. Got my TLT out to April 30th. $92 is my sell strike. It may get called away. It's up $1,600. I've got this on every account. So it's 1,600 times. So I'm up about 21 grand on TLT. I'd like to kind of play the income side of this. I could see TLT able to go higher. You know, this high is 93. I don't want to get too fancy or too cute with it, but I would say if we have a play to symmetry, I mean, even if I get this thing where I try to stay with TLT until we get to 100, you know, like I could see us coming back to these highs again. 100 would be like a nice destination to be long. Also, this eliminates some of the volatility out of our portfolio by having the what should be like a safety level. If equities are down, bonds should be performing well. So, I mean, if I was looking to stay long TLT, I would be staying long. I think $100 is a good target. So, not bad. All right, let's get some other stuff here. 10 and 2 year futures. Anything on? I mean, we did have a little scare through the last couple of weeks. I mean, J&K is your high yield bonds. This is kind of your credit spread look. So far, so good, but keeping a close eye on this one. If it ends up dropping lower, then we're going to see some less liquidity, probably some more exits, probably some more fleeing to the downside. Initial jobless claims. We talked about this one yesterday. Watching that, you know, kind of see if there's any major upticks. This is your unemployment rate. We're at 4.1 for the estimated non-farm on Friday for unemployment. Core PCE is at 2.8. China probably just still hanging in there. Baba's fine. Baidu at 92. I think I still have a collar on Baidu. Baidu there. This is my collar trade, I believe. Yep. So this is a collar trade. So I have the shares. There's my collar trade. Only 16 days out. I'll probably just put another collar on it. I don't mind it getting called away at 100 or higher. Just depends. But I want to have a protective put on it as well. FXI, KWeb, JD's the other one. This one, I don't remember where I rolled this one out to. Maybe April, maybe May. Yep, out to May. So if it stays above $40, I get this one called away for some profit. This could end up being a nice little winner. This should be maybe $4,000 or $5,000 on JD. Just has to stay above 40. I'll keep an eye on that one. Okay, Schwab dividend. Hanging in there with a pretty good resiliency. Looks a little bit even better than the Dow. Schwab growth, garbage, but you know, we could put in a low. I mean, look, this bull market scenario, just gonna make a little case for it. Let's say that the market goes this flush, this pullback, this bear trap, this move back up, settles back in, and then eureka, we're back up to highs. You know, I don't know if that's the case, but I mean, that would be a bottom. If we're going to bottom out around that 200 moving average, that's what it's going to look like. Some type of bull pattern off these lows, some type of bear trap. My concern would be that we rally up here and it's just a bear flag and the market's like, yeah, we're not done yet. And then there's more. So it is a very much a 50-50 outlook in my opinion. Advanced decline, how many stocks above, as far as like broader market timing, until this is dumped back down here to like 12%, where this is dumped back down to like 10 or 11%. I still don't think it's a full, you know, full green light to just buy everything. Some other stocks here, fine. AXP staying above this one. Did I close the April one? I think I did. Yep. So I just have this ratio spread out to May. Need to stay above 260. Johnson & Johnson pulling back. Oh, baby, what's going on here? Earnings is mid-April. News. Judge rejected a $10 billion settlement proposal, marking its third failed attempt. Okay, well, I've got puts at 135, so I'm not that worried about it, but this has been a pretty good performer in the healthcare space for me. Progressive Insurance off near highs. Chubb near highs. That's good income. Palantir, ratio spreads. Let those go to full expiration. Carvana, nothing. Maybe an opportunity down here on Salesforce, maybe. O'Reilly, I did a hypothetical one. I talked about this last week. This was a 417. I didn't take this trade, but I'm watching this one closely. This would be a threat around 1460. We're not that far away. I mean, that high was 1450. So this this is one of the top 50 performers in the U.S. right now. All right, some other stocks is lifted in their sectors. Let's go currencies, and I'll let you go for today. Aussie CAD, still like long, still like leveling in. Aussie Swiss, same thing, still like long, still like leveling in. Watching that flash crash low from August 2024. Aussie Yen, watch the flash crash low if we're going to build support. That's a pretty good way to do it. Aussie New Zealand, I'm still long in this trade. I don't know if this is, I mean, this is my target. I'm long with a channel here, right? So long with the channel here and looking to see if we just go back up towards, 1390. Realistically, I might just take this trade off. If we come back up to these highs, I might just dump the trade or at the very least move a stop loss. But I'm looking to see if this channel will still hold and we get to higher highs. So that's why I'm holding long. Otherwise, it's just a big range trade. Aussie CAD, New Zealand CAD, Aussie, New Zealand. I could range trade those things forever and never really worry about direction. Just trade the inefficiencies, trade the pivots, trade ranges, and they usually are pretty responsible. Aussie dollar, nothing on this yet, but I would look at a pending buy again if it was offered up around like these lows. I'd look at an Aussie dollar buy trade again, or I've got this buy limit down here at 6,000. CAD Swiss, I'm still holding long. Looking to see if we can stack these babies up all the way to about 64.90. CAD Yen, right off the equal lows from August. Swiss Yen, no trade. Euro Aussie, be careful on the Euro Aussie, Euro CAD, Euro New Zealand. I mean, there's just a lot of aggressive movement. You've got to get your higher time frame structure with your lower time frame precision. You've got a sharp turn on the day. It's just hard to trade like a straight up candle followed by a straight down candle. It's very hard to trade that unless you know where this high is at, and it still didn't test it, right? It didn't test the highs. So anyway, somebody's asking why is Bitcoin jumping? I don't know. I mean, the markets are up. So we've got 55, 58 in the S&P. I mean, the S&P's up 70 points from the lows today. There could be just some flows. I'll go back to Euro Aussie in a second. I mean, I wouldn't say this is jumping. I'm just saying like it's green. But Bitcoin doesn't look exciting to me until we're above these highs or we're coiling into a better price. So, I mean, I wouldn't get overly excited unless we're on the right-hand side of this trend line to say that the bulls can clearly see there's permission to then go up. Why is the market up today? Like I said, I mean, this could be the bear trap scenario. I mean, look, this whole idea of global recession is, I think, a little overblown, right? I mean, prices can lead there. Like I get it that it's all connected. So I mean, if the S&P rolls over and we start cracking these 5,500 lows and we start getting down to this terrible bearish territory, then Wall Street could feel it first. Price action feels it first, and then all of a sudden it's like, I mean, there's momentum both ways, right? A job gained could be followed by another job gain, another job gain, and that sentiment and that trend continues. But job loss follows another job loss, follows another job loss, and all of a sudden that it's a perpetual cycle. So markets up today. I mean, I think it just shows like the levels were defended yesterday. There's maybe some drift and recovery, and this could be another opportunity to kind of de-risk just a little bit. But I mean, I'm not a perma anything. I'm not perma bull. I'm not perma bear. I think this is a spot to be just not doing anything brave or stupid. Just trade small, take good trades, define risk, and be patient. I mean, if I'm going to get way more bullish, it's going to be way the heck down here. I'm not way bullish now. I think taking some bites here is understandable, but that's about it. There's too much noise around this 200 moving average for this market to be indecisive. And it's like the bears can take control, the bulls can take control. I don't know which one's going to do it. Okay. All right. Let me go back to currencies. Euro Aussie, Euro CAD. So, I mean, it looks like we're getting a decent commodity move, meaning like I could see this heading back down into some type of corrective level. So, maybe getting a little nod from Aussie, CAD, New Zealand getting a little bit stronger here. Euro CAD, same thing. Euro Swiss, fine. Euro Pound, no trade. Euro Yen, Euro New Zealand. Yeah, I mean, if it holds this level, I mean, Euro New Zealand getting back to lows or just a pullback zone. There's previous resistance here. Could be a little, again, if you're following on a smaller time frame, could be a little 1-to-1 or slightly greater. Just got to be in those smaller time frames for some precision. Still leveling into euro dollar. Let's see what happens there. Pound Aussie. This could be a pretty good fade. I like this one potentially as I want to see this channel break though. Like this isn't perfect, but if we break the channel, returning into like previous highs or some type of pullback zone. Pound CAD. Just some type of balance, right? Here's your low, here's your high. If the market heads down, we're just finding some equilibrium somewhere here on the pound CAD. Pound Swiss, nothing. Pound Yen, nothing. Pound New Zealand. I don't like it as much as Pound Aussie, Pound CAD look a little bit cleaner. Pound Dollar, no trade. New Zealand CAD is still like leveling in on my big lows. Buying lows, buying lows, buying lows. Stay in the range. Big range from 76 to 88. That's a 1,200 pip range. I would trade that all day. New Zealand Swiss, leveling in. New Zealand Yen, off the lows. Be careful on that one, as of course, stop area below these lows. New Zealand dollar. Watching closely. I mean, maybe a revisit of these lows. 5,600 down to 5,500, maybe not a bad spot. I'm going to delete these levels since I closed out those trades. So, yeah, if we get to 56 or 55, I'll probably take some bites again. Maybe looking to go long New Zealand dollar. Dollar CAD, no thank you. I don't know what this thing wants to do. This whole idea of like US and Canada becoming more like adversarial instead of friendly neighbors could make for an interesting dollar CAD position later this year. I just don't know where we're going to go. Yeah, I mean, I see this as resistance. This little shenanigans that the market played with that big gap over the weekend. That could be a topping pattern where if oil rallies, then sure, the CAD gets the upper hand for right now. I just wouldn't be super I wouldn't be long-term bearish on this. I could see us going back to like 3,900, 3,800, but that's a halfway point, right? So could we go further and go all the way back down to 32? Maybe. But I would say if you're lucky right now, the swing is this type of swing. Playing it down to like 4,000, 3,900, getting out, taking your profit, and then see what's next. Because if this level bounces, resistance becomes support, you can take this right back up to the highs. But I'm sure there's a lot of traders that are positioned for this right now, but short dollar CAD, stop loss above the swing high, and hoping there's some follow through. Right? Dollar Swiss. I wouldn't mind it hitting 92.50 or 92.05 again or 9200 again. If it pulls back, that's fine. I'm just going to hang in there. Dollar Yen, no trade yet. And that's kind of it. So, all right, covered a lot. Gold, silver, dollar, all the currency pairs, stocks, where are we at for the indexes, watching things. Trump tariff talk tomorrow. We're actually green on the day, so SPX up 0.44. Q's, NASDAQ up about 0.7. Dow's up 0.2, Russell's up 0.5. NASDAQ leading the way. I think MAGS is probably the bigger reason why. MAG's up 1.87%. And helping the markets get a little lift. Mag's up almost 2%, and the Nasdaq up 0.75%, 1%, S&P up about 0.4. If the Mags fights back, I think that helps the market get a lift off. Fibonacci. I mean, it's not an algo. It's just an auto. It's an auto indicator. It's not an algo. So, I mean, it'll plot for you. You can go to your charts and just plot it. So it'll auto plot your fibs, which is kind of helpful. That was something proprietary to Smart Trader, yeah, from what I know. So, all right, I'll let you go for today. Let's see what happens tomorrow. Today's April Fool's, so let's see what tomorrow's real news from Trump brings. I don't know what time he's talking tomorrow. So it looks like sometime between, 10:30 and it's got 4. Okay, so 4 o'clock. It was tentative. Now it's 4 p.m. So I think that's probably a good thing because that means it's after market. So I wonder if all day tomorrow this will be good for kind of selling some premium. Hopefully, if the market is like calm and doesn't really know what to do, that would be great. I can sell some premium on SPX tomorrow, grab a few bucks, and then we can see what aftermarket hours looks like and what Thursday's potential gap looks like, one way or another. We're gonna deal with it. All right. See you tomorrow, everybody. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.